Good day to one and all. This is Dr. Sivaram of iknowindices.com. I was giving during that of the European session tracking live the Forex market together webinar, part 1. Now I'm going to give you part 2 of the webinar. During that of the part 1, I just explained to you how exactly we have to develop a different perspective about the Forex market or any market for that matter, and then try to understand how men are trying to trap the men in the financial market. So we should be able to be aware of it and avoid being trapped, so that we'll be able to read the intentions of the players from time to time, following their market moves, and then trade along with them rather than trying to trade against them. And one of the method they follow to trap the traders being create the market sentiment and act against that of the traders once they have committed the positions. So when they create the market sentiment, don't be involved with that of the market sentiment. Don't think that trend is your friend. Once you think about it, then immediately you develop the bearish feel or the bullish feel. When the market is dropping, once you develop the bearish feel, you feel like taking a sell position in a dropping market, or whenever there is a bounce back, you try to sell it. Then later on, the players are able to trap you easily. Similarly, when they gain the levels in the market, don't develop bullish feel straight away. You try to read the intentions of the players and then try to take buy positions. So if you don't do that, they just induce you to take the buy position at the highest level, then start making the slide. That becomes a surprise for you. Invariably, when you become surprised, the market fear becomes acute. Once the market fear grips you, then immediately you want to just find a short-term solution. The only solution for you when you are holding an unfavorable position is to cut loss. After cut loss, you find that you did a mistake. So this leads to another set or another trend, that whenever a position is making loss, you try to hold the position irrespective of the loss until otherwise you try to see the profit. Then in that process, you find that when the market goes against you again and again, you try to do the averaging. They know very well, those traders who do quick averaging in the market lead to over trading condition, accumulating too many positions. As a result, such traders, when the market makes another move against them, close the positions in distress. So avoid all such conventional methods and try to read the intentions of the players from time to time. Thereby, you will be able to really make good profit from that other market. Now, during that other part 1, after explaining these concepts, I placed some limit orders in the market. So I placed a limit order in the case of euro at 1.0738. That is 37 was the initial low. So I kept 38 as the buy limit order. That order got filled during that of the data release time. And as I explained that they are expected to, they just made a downward stop and below that of the initial low and raised and made an upward stop, and that is called either way stop. And after making the higher level stop and around 1.0785, they started holding around that of 1.0770 level. Then I was telling you, we can either do a sell and buy trade by aiming for about 20-30 pips, or otherwise we can just place a buy limit order, so they will make the fill. Then afterwards, during the US session, they are expected to gain the levels. Now, if you look into that of the time, it is 14:08. That is 14 to 14:30 GMT is the gap time. So during the gap time, they are making a small dip in the market in order to gain during that of the US session. So that is what the players' intention is. So whenever they make a dip during the other gap time, understand during the session they wanted to gain the level. So initially, I kept the buy limit order at 1.0738 that got filled, and my hedge order sell stop is at 1.0708. So the low they are set is 1.0727. From there they started gaining the level and they are holding without breaching the new low. So after the gap time, slowly they will gain the level. I'll be able to book profit near that of the high. So this is what during the US session we can do. Similarly, in the case of GBP, I kept the buy limit order at 1.2748 because 1.2747 was the initial high. They have been holding above that of the initial high and not breached the high and holding above that of the initial high. Then I was telling you that they are likely to gain further up after coming to that of the initial high level, and they may not be doing a downward stop at that time. So 1.2717 was the initial low that has not been breached, and 1.2747 was the initial high. They just came below that, came up to the 1.2738 and gone up. They just made a downward stop and for that of the breakout traders and then started gaining the level. So they are likely to gain level in the case of GBP first, followed by that Euro is expected to gain. Then you might find that Australian dollar is also expected to gain the level. In the case of Australian dollar, then 0.7432 was the initial, the new low they have formed, and they have been holding around that of 0.7444 below that. That was the initial low. Then they came down quickly and then started gaining the level when GBP Euro was making a downward stop, and this order got filled, and then subsequently I'm holding it with a hedge order to limit the risk. So you find that I was talking during that of the European session. I missed the early part of the European session taking the position, and so if it have taken during the downward stop and during the early part of the European session, by around 9:30 I would have just booked the profit. But since I was explaining to you, then the next opportunity came during the late European session. And for that, I just kept the limit orders. And those limit orders got filled. The market is around the low. And now between 14 and 14:30 GMT is the gap time. After the gap time, they are expected to make the swing near that of the low briefly for about 15 minutes during the US session from 14:30 to 14:45 and then start gaining the level slowly. As I explained, they are expected to make the intentional move on the upside. So now you find that the positions are all taken and we have to see when exactly we are going to book the profit on the buy positions. So for the benefit of those who have joined late, I'll explain the market tracking technique. In the market tracking technique, we use the live market quote page as the tool. And with the help of the live market quote page, we note down the initial lows and the highs around 3:30 GMT. So I noted down the initial lows and the highs. By 3:30 GMT today, and that is why I was telling you that what was the initial low, what is the initial high, etc., and how they have done the downward stop and upward stop, and now they have come to the downward level. They did not make a downward stop, and they made the upward stop, and then they are holding around that of the initial high. Still, they are holding around that of the initial high, not coming down below, and then they are likely to gain further upward move. In the case of yen, the low they are not breached, the high they breached. I was telling you that they will make a brief upward stop, and initially 114.19 they went up to, and then again they gained to the same level and dropped. If we take a buy, then probably we can get a profit of around 5-6 pips. Instead, I was telling you when they come closer to low, we'll take a buy. Then sell and buy is not advisable because they are making the contrarian move by gaining the levels in the case of USDN as well as gaining the level in the case of GBP, and also they gained initially the levels in the case of Euro. Now they are making a drop during the gap time in order to gain during the US session again. In the case of CHF, they just made the downward stop and the upward stop and started holding in the middle level. Now they started gaining more levels in the case of USD CHF above that of 1.01 level, and after going upward they are likely to come down again because euro has made about 38 pips negative net change. They just done about 37 pips positive net change in the case of USD CHF. After gaining the levels, they are expected to gain the levels in the case of euro. As I was telling you during the European session, they just gained the level in the case of euro CHF, and by holding USD CHF at the higher level and gaining more levels in the case of euro, they will continue to gain the levels in the case of euro CHF. Then afterwards, they will make the slide in the case of euro CHF. So they make such contrarian move. Now another contrarian move here, they gained the level in the case of GBP and also gained the level in the case of USD yen as a contrarian move. These are all the techniques they use in order to handle the crosses. Many people were thinking that the crosses are being handled because of that the majors bring in the moves. It is not like that. The players are actually making moves only in the case of the four majors and two commodity pairs. As a result, the crosses show variable moves. And when the crosses show variable moves, quickly they take the sell and buy and sell positions. The volume is very thin compared to that of the majors in the case of crosses. That is why you come across the pip values, the spread is also higher and they make very big moves. Especially in the case of yen and yen crosses, they make one-sided moves. So we have to be very careful while taking positions, and it is not advisable to hold unfavorable positions for a prolonged period as far as yen crosses are concerned, unless and otherwise you know how to trade using the hedging. Then in the case of the commodity pairs, USD CAD, they just made a downward stop and below that of the initial low and came up, and then they have gone to that of the higher level and made the upward stop. And now, as I explained, that they are making now the USD gaining move in the case of USD CAD and Australian dollar to start with. And later on, if you see Australian dollar was holding below that of 0.7444, and still they are not dropped it even though it shows negative net change. So slowly they will gain the levels during the of the US session. So we 0.7449, and they will slowly gain the level again from that 0.7449 and start gaining the level of once they gain the levels in the case of GBP. With the help of the live market code page and also the net change, we can find out which pair they are going to move first, because the forecast says that the rise is expected to happen during the US session in the case of the numerator, and the drop is expected in the case of denominators. So in such a situation, the pair which is showing positive net change will be making the move first. So GBP, the numerator, is making the positive net change when compared to that of euro and Australian dollar showing negative net change. So they will gain the levels first in the case of GBP to create the market sentiment during US session, which starts from 14:30 GMT. Then afterwards, they will gain the levels in the case of the currency which is showing less negative net change, namely Australian dollar. which is showing 24 pips negative net change, and euro is making about 38 pips negative net change. So they will gain the level in the case of Australian dollar. Afterwards, they will gain the level in the case of euro. That way, they will be able to handle the majors and the crosses during the US session. There is a question around that time, but could be 30 minutes more or less depending where the peak high or low is. See, normally they set the peak during the uh, early or the late sessions, not during mid sessions. Most of the occasions they will set the high or the low during the early session if they want to reverse the market. If they want to continue to gain the level after forming the high during the early session, every 30 minutes they will breach the new high and go above. Or every 30 minutes they will breach the new low and go below. That means it is an intentional move. And once they make a slow downward move, breaching every 30 minutes the new low, and it is an intentional move, we should not do buy and sell trade. Similarly, when they are making an intentional rise, that is every 30 minutes breaching the new high, even if it is coming close to the resistance, we should not do sell and buy trade because they will continue to breach higher. Always keep in mind, slow means mean, that is pip by pip they will gain the level or drop the level. Once they gain pip by pip, every level you sell, they are absorbing. So that means what? They are in the mood to buy at every level sell. Then quickly they gain the level 50 pips or 75 pips and then hold after the breakout or after the data release or whatever it is, or after a rumor. Then once they quickly gain about 75 pips, then they hold after forming the new high, hold near that of the high, but stop cutting the new high for 30 minutes. That means that is the end of the upward move. Afterwards, they will hold high and start making the slide. Distribute their buy positions to that of the traders and slide and then buy back again near that of the low set for the day with a stop print or without a stop print. So that will give an indication for you whether they set the high and afterwards they are not reaching the new high during the early session. That means it is an upward stop and they wanted to make a slide later on during the session. But if they continue to breach the new high for more than 30 minutes, so they breach the high and within 30 minutes breach the high again. That means they are making an intentional move on the higher side. So every dip you can take a buy will be able to book profit. Hope you are able to understand the difference between the stop and the intentional move. So if there are any questions, you can ask me. I'll answer the questions. So the forecast says that they are expected to make the swing and rise during that of the European session and then swing and form up move during that of the US session. On the 13:30 GMT data, they just made the slide and then again they are expected to make a lower level swing and form up slowly up to that of the high. And tomorrow, again they are expected to make the swing and form up move. So since they are going to continue that form of move till tomorrow, if you take a buy position, you'll be able to book profit easily without much of a difficulty. But when you are taking a buy position, it should be near that of the low, not near that of the high. And we can do a breakout trade provided they hold above that of the initial high for more than 2 hours. Then you can do the breakout trade. So what we do is we use the derived forecast. The forecast says that Euro and GBP are expected to gain the levels during the US session also. Then we do the market trading. I was showing you the initial highs and the lows, and explain to you how during that of the gap time, 14 to 14:30 GMT gap time, they're making that of the false move on the dip. So during the gap time, when they make a dip, then during the session, they are expected to gain the levels. That is what the gap time moves. Gap time moves are false moves. Similarly, the move before that of the data release or false move. And that way, we'll be able to easily identify the type of moves they are doing it in the market and then try to appropriately take positions. Besides that of the derived forecast and the market trading, we need to necessarily use the trading strategy of using the hedge order in a loss making position and use the trailing stop in a profit making position, so that you will not take unlimited risk, because limiting the risk is very essential when you wanted to become a successful trader. Just like that, taking a blind risk or simply taking that I got a risk appetite, that is not appropriate. Simply you can say that I got a risk appetite, but when the position becomes negative or when the loss becomes bigger, then you start yelling and you start blaming you, and that will not help you at all. So if you have taken the position and only you can close the position either with a profit or with a loss, that's what people used to say. If at all you are hungry, only you can eat, others cannot eat. When others can eat for your hunger, then easily we can solve the problems in life. But that is not possible. If you are hungry, only you can eat the food. If you are sick, only you can eat the medicine or take the medicine. So you need to learn the trading strategy in order to limit the risk and maximize the profit. Then similarly, the market timings are very important. So keep a note of it, how exactly the market timings are to be followed strictly. And these market timings is time tested for the past 18 years. So you can understand that uh, these timings are followed by that of the players out of compulsions. They have no other goal. So if you follow the timings and just watch how exactly the players are making the early session and the late sessions, the major moves, and mid sessions, the moves and the crosses, gap time they make the false move, you will be able to easily understand that how systematically the players are doing it, and ask us to follow the Asian session, the Japanese session, the Asian session, European session, New York or UK session, New York session, London session, New York session, Pacific sessions, etc. Because they purposely give a different information to us. They ask us to track the market using the US time frame, but they follow the GMT time, because if they want to cheat us, then that is a way they can do it. Then these are all the type of moves I explained it. If you got any doubt, you can ask me questions so that I'll explain to you. Then how are the moves forecasted for the coming days? Swing and slide, swing and rise, etc. See, each session they are expected to make specific type of move. And there are various other factors associated with regard to the market predictions. That is what it took 12 years for me to track that. And with the help of that, I have been giving the forecast for n number of years. And you see, all the past years, I have been giving the forecast through FX Street and also to my clients. And so all these forecasts are derived based on specific type of algorithms, so which I don't disclose to anybody, because they will misuse it in order to become the richest in the world. I do not want to help such people. I wanted to help only the small traders who wanted to earn something from the market and quit the market. That is why I'm not disclosing it. I give the forecast only to that of the limited members. And if they are illegally using it, if you ask in the market, you know that I don't give the forecast, even if they pay $1 million. Okay, so that is my commitment. So I give the forecast for the entire week on Mondays. And this is how I give it during the Asian session, live market analysis webinar. And every day the type of moves are being mentioned. And if you follow it carefully every session, you will find exactly they make the moves of that nature. Then later on, you'll be able to, I will do the review on Friday during the Asian session, and then you'll be able to find out how dependable the forecast is. So I'll come back on 8th of December, that is day after tomorrow, and I'll be giving the spike trade calls before that of the ECB press conference, or the interest rate decisions and the press conference. So now itself, the forecast, the swing and rise is expected. Afterwards, swing and firm is expected. So they are expected to make a quick rise after that of the ECB press conference and continue to gain the level in the case of Euro and GBP during that time. But when the traders think that the going is good, they are expected to make the dip and rise on Friday and rise during the European session. And when the traders freely become bullish, they will simply offload the positions and earn money from that of the bullish traders. So keep in mind, this is how they are going to make the moves. That is what the forecast says. Then we will fine tune the forecast using the market trading technique on a daily basis. Then we will use the trading strategy to limit the risk. In the event if the forecast goes wrong, our trading strategy should be able to help us to limit the risk and maximize the profit. It is not that we simply minimize the risk is a good trading strategy. We should be able to maximize the profit. Simply calculating where the resistance is and keep your exit order or take profit order. And if the market doesn't go there and simply reverse before that, then you feel disappointed. Next time you keep 10 pips or 15 pips below the resistance. Then next time you find that it breaches the resistance and goes above, then you feel very bad. Oh, I could have just waited for another move to book profit. So don't go in for this sort of uncertainties. So once the position start making profit, eliminate the risk by keeping stop at entry. Then afterwards, you use a trailing stop in a profit making position. Thereby, you will be able to really maximize the profit. You will not miss the opportunity of making profit once the position start making profit. That is very essential for small traders, because you have to build up the equity. You cannot do one single trade and build a castle out of that. You have to earn 20, 30 pips or 40 pips. Sometimes the going is good, you can earn about 50, 60 pips. But you should continue to try small swing trades. And simply when the position is making loss, don't say that you are trying to do the position trading. And that is why you are holding it for 2-3 days. It is nothing but you are trying to say that you are not a fool and you are cheating yourself. You are actually a fool. You're holding a loss-making position for such a prolonged time, and simply say that I am not a fool. I can pump in more money, and these sort of things are all excuses you are trying to give it for yourself. But you are not come to the market for that purpose. Have you come to the market in order to pump in more money to that account? No. That you wanted to earn more money from the market. Instead, you get trapped and you are trying to get out of the trap. But that is not easy. by doing the averaging, because once you're going for an averaging, that will lead to over trading. That's what I was telling during the part one of the webinar, that take only one position at a time. Once the position is closed with a profit, then go in for another position. And you have to identify which currency will be able to really give you the profit. So for that, I explained to you the currency which has made a spread of more than 40 pips in a given time. And those currencies the players are handling. In such currencies, if we take the position, we will be able to really book profit. If you take the position in a currency which has not made 40 pips spread, then it might be making subdued moves. We'll be simply holding the position for a prolonged period without any significant profit. Similarly, trading crosses. Many people think that it is not influenced by the economic conditions of various countries, and it is purely technical. It is not at all. The players make contrarian move under regular moves like US dollar weakening and the US dollar gaining moves. Only when they are making contrarian move like this, if we take positions in the crosses, we'll be able to make profit. During such time, you will come across in the cross, the spread will be more than 70 pips in the cross. Then you can take position in the cross. That will give you the profit. Please ask your questions so that I'll be willing to answer the questions. If you got any question regarding the hedging, if you want to know what is going to happen to the positions, you can see how they are holding it slowly gaining. As I said, you just watch whether it is coming true or not. I'm giving you how to track it using a live market page. I'm not keeping this a secret. So slowly they will gain the levels in GBP. Afterwards, they will gain the levels in Australian dollar and then euro. Then you can see, okay, they have a systematic method of moving the market. The only thing is we need to know their language so that we will be able to predict them, their moves. Then once you develop the skill set of predicting their moves, you will be able to earn substantial money from the market. So I'll carry forward the positions, what I had taken it during the European session. The same. So slowly, Euro is making profit, GBP is making profit, Aussie is making profit. You just, once it makes about 20-25 pips profit, keep stop at entry and remove the hedge order. Once the hedge order is removed, if they reverse the market, we don't incur any loss. So first of all, you have to ascertain that. So I am just taking three positions in order to show you how in different currencies we have to find out whether you can take the buy near that of the low, or buy above that of the initial high, or buy below that of the initial low. But don't take simultaneously three positions. You take only one position at a given time. After booking profit, you think of another position. Okay, do you close out the initial position when being triggered in the hedge? Suppose I had taken a buy position in euro and market comes down and fill the hedge. Then immediately I watch for 10 to 30 minutes. So I will be having a buy position as well as a sell position. And if the sell position, this buy will be making loss because once they are near that of the sell. Then when the sell position is not making profit during the early session or during the gap time, I understand that they made a stoppant, and because of the stoppant, it got filled, and market is above it now. So when the market is hovering around that 1.071011 and not coming below that at all, that sell position is not at all making profit. Imagine that I had done a short selling as a breakout trader, taking a sell and the sell is not making profit. What do I do? I will close the sell with a nominal loss or with stop at entry. In the platform, they make quick up and down moves more than the spread. What you come across in the live market quote page. In that time, you will be able to see that the sell stop will be, the stop at the sell stop will be filled. So I'll be closing the hedge order without any profit or loss. Then I keep another hedge order, either 10 pips or 20 pips or 30 pips. 30 pips will be ideal. Below that, another hedge order to limit the risk for another 30 pips. And once the market moves closer to high, I'll just move the hedge order to the original hedged level. Then once it shows 25 pips profit, I'll keep stop at entry and remove the hedge order. So I have not incurred any loss during the downward move. I have not become panic. And once they start making the profit during the session, as an intentional move, I'll be capturing the profit. So when you are taking the position during the intentional move, you can hold it for 2 sessions and book profit during the start of the 3rd session. If you are taking the position during the extended move, they just go up and stop cutting the new high for more than 30 minutes. That means it is only an extended move. They will make a downward move before making an intentional move on the upside. Then you just wait for the downward move, and during the next intentional move, you can take a buy position and book profit. So identify the type of moves they are doing it in a market. That is vital. Then you'll be able to do fearless trades. Once you are able to read their intentions, there is no surprise. The market cannot give you any surprise. You need not even say that, let the market settle, afterwards I'll enter into the market. What? Once the market settles, if you enter into the market, you can get only 5 pips. Only when the market looks uncertain, only when it is going to make a spike for the data release, if you capture the position at the right direction, we'll be able to get good profit. Be an opportunity trader rather than an addicted trader who try to do scalping. Can you explain again the initial low and the highs? I worked that out. Okay. See, by 3:30 GMT, every day I make a note of the initial high and the initial low. Here in the live market code page, you come across the high and the low. Why it is called the initial low? By 3:30 GMT, they set one high and the low. Afterwards, what happened? They breached the high and formed the new high, breached the low and formed the new low during the course of the day. So in the live market code page, you will be able to see the upside move sometime and the downside move on the other side on some other time. They will be making the swing. If they make the move within the high, between the high and the low, it is called a swing. If they go above that of the initial high, which is formed by 3:30 and come down, which is top end. When they come up to that of the high and just reverse and go to that of the low, it is called false move. So I hope you are able to understand. Here the current live quotes are given. The high and the lows are important. And here you come across the net change. This net change indicates how much of PIP the market has gone up or euro has gone up today when compared to yesterday's US session close. This net change is given to the other players and the bank not to exceed. That is why the net change is given. Many people think that it is of no use. It is for just arithmetic purpose. It is not like that, or for any scientific study. It is not like that. This is given to limit the players' move in the market. How? They cannot rise or drop more than 150 pips in the case of euro in a given day. Sometimes you do come across 200 pips rise or 210 pips rise or want a volume in the market. But towards the close of the day, during the US session, if you watch, they will close it around 150 pips net change level in the higher side or the positive side or the lower side, the negative side. So they have the limitations. So we will make use of that limitation as a trading opportunity. See, even though the players have got huge money power, but still they are to be limited. No, otherwise, they will just make very big market moves. No, when they are not regulated earlier in 2000, 2001 and things like that, they have been making about 800 pips rise and 1100 pips drop, etc. You know, when Swiss was telling that they are not controlling Swiss franc move, then immediately Swiss franc USD dropped like anything. You know very well about 2,500 pips, it made a drop. So the players are capable of making such drops. But on normal days, they are not supposed to do that. That is why you come across the net change. Only on exceptions, when there is a big crisis for the players, then they are allowed to do that. So the net change you have to follow. And besides, they continue to swing near that of the low, near that of the high. They form the new low, new high. And the initial high and the low I noted down. Then I find that they have made a downward stop. And with the help, comparing the live market code page, I have not watched all 24 hours. But with the help of that initial low, I say that, okay, they made a brief downward stop. And afterwards, they made a brief upward stop for 15 pips. And now they are holding it still below that of the initial low. They are making the swings in order to make the rise, because the forecast says that they are expected to slowly gain the levels. But the market reading says that we can simply hold the position because they stopped cutting the new low and they gained the level, and it is 14:45, 15 minutes of the session. Slowly they will gain the levels. And in case if they don't gain the level in a currency wherein you are taking the position, the other currency they are raising it, because if they wanted to handle the crosses, then you have the hedge order to limit the risk. See, there you come across the importance of trading strategy. Till end of the day, they will be following as a guiding levels, the initial lows and the highs. Then is it the high and the low from 00 GMT? No. They set it by 3:30 GMT. See, 000, if they set it, everybody will come to know. And they are setting the initial lows and the highs for a communication purpose. I cannot disclose it openly here. And so they choose to have the initial lows and the highs similar to that of the session timing as 3:30 GMT. I can't help it. And you know, the gap times are nothing but the naturally occurring times when the banks in one area close. For example, the Japanese and the European, the Japanese and the Asian banks close their trading for currency conversion. And the banks in Europe and the UK open. Then the opening time, closing and the opening time, there is a gap of 30 minutes. And that is naturally occurring gap time. That is why they are not able to shift it at all. So in the gap time, they make the stop-ins by using a specific type of order. If they do such stop-ins during that of the regular session, there might be currency conversion trade from that of the importers and the exporters. And their orders might be filled, and they will be having a huge higher level buy or a huge lower level sell positions. So to avoid it, only during gap time they make such moves. So we have to understand the limitations of the players. Then you know that they have no other go than to follow it every time. Then once you learn how to read their language, you don't become surprised. Any other question, please? Okay, by end of the year session, you can just watch what happened to that. Otherwise, I'll recollect during my uh, spike trade call I'm going to give on Thursday. And also, I'll review about it on Friday when I am giving the Asian session live market analysis webinar. So these are all my contact details, my website, iknowindices.com, i-knowindices.com. My email ID, dr@iknowindices.com. My Skype chat is iknowindices@hotmail.com, and Yahoo chat also. Then my phone numbers I have given it. So these are all I have given it, not for any business. If you have got any doubt and you are shy of asking such questions during the webinar, you are welcome to ask the questions. I'll be willing to answer to those questions. So don't think that I'm trying to take the lead out of that. So I wanted to help the small traders. I only make the institutions and the bigger traders to subscribe for the calls. So don't think that I will trap you. So I take this opportunity to thank FX Trade for the facilities provided to communicate with you people so that I will be able to share my knowledge and experience in the market and make you all people fearless traders. That is my objective. So slowly get rid of the market fear by understanding the market well. Wish you all the best in your trades. See you on Thursday.